Hello and welcome to 2026. Happy New Year. I'm Gillian Seguin at IA Private Wealth. I'm an Associate Wealth Advisor with Reyes Group. I'm here with our year-end commentary, also the close to Q4 2025. Hope everyone's starting their New Year's resolutions off well, considering the great year we had last year in the markets. The S&P 500 was up 16% over the year, and in Q4 up 3%. The Dow Jones also increased 13% annually, with 3.8% coming in the last quarter. NASDAQ up 20%, with 3.16% coming in the last quarter. But the most exciting for us up here north of the border in Canada is that we were one of the top performing major indices, finishing the year up 30%, with 6% coming in Q4. This really marks the strongest move we've seen in our index here in Canada since the post-financial crisis in 2009 recovery. What really spurred our rally was, of course, the materials. Gold being the undisputed champion, starting 2024 at 2,500 an ounce and closing out in December 2025 at 4,500 an ounce. We also had very strong financials. Our Canadian banks on average increased 44% over the course of 2024. Emerging markets globally, they were the top performing equity market with a 34.4% market increase. I think that speaks to a lot of people looking to flow money outside of the US and also in areas where, particularly in China and where we're seeing some more stimulus from governments to get that economy going. The Bank of Canada decreased rates 4 times over the course of 2025, cooling inflation, which is a big topic that we saw last year, down to closer to our target level of 2%. We're sitting at 2.2%. In the US, they were a little bit lagging, only started to decrease their rates in September, and then there were 2 more cuts after that. They're sitting in and about 2.7% on their inflation levels. So overall, a pretty great year. And what are we seeing now going forward into 2026? So the overall sentiment is that we are still going to have a bullish market. However, I would say that a lot of the risk on trades that we saw that fueled the rally in 2025 have maybe come off a little bit. People are taking their gains, investors are building cash positions and preparing for some volatility. Obviously, in recent news events, we've seen some geopolitical tensions just in the last week or so. So just preparing for any hiccups that may transpire out of that. We also saw last year, which was interesting, that all asset classes gained value. This hasn't happened since our pandemic that we saw in 2020 to 2022. So that also definitely gave people confidence to start putting money into the market. The last big headwinds that we still have ahead of us are, of course, the tariffs. As I had indicated quite a few times last year, the larger big box stores were really absorbing these tariffs and playing into their margins, not passing them on to consumers. I think that will change in 2026, and what that could lead to is a weakening US dollar and a tick up in inflation in the US. So what I would say going forward into 2026 is try to avoid the temptation to react emotionally to headlines, and really it's going to be important to stick to your fundamentals of your long-term planning. So thanks for joining me today. We'll see you next quarter.